Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is January 31st, 2006. It's Wednesday. The market's just closed, so let's go ahead and take a look at what we had happen today. Federal Reserve left monetary policy alone once again, and the market responded by these S&Ps going up about 90 cents, or about 0.75%. And once again, we're reminded of why I always say, as long as the 50-day moving average is rising, we want to give the benefit of the doubt to the buyers. And that continues to be the case in here. We've seen, we did have reason for concern with this breakout that looked like it failed. However, it did find support once again. And yesterday I was noting on the shorter term, this 10-minute time frame, that we were showing signs that it was looking set up to move to the upside once again. We had these moving averages cross over a couple days that represented indecision, and then the market took out resistance and got back above that 5-day moving average. And once it got back up above that 142.80 or so level and held there, when the Federal Reserve announced, the market took off. And once again, the short sellers are on the wrong end of the market as far as the S&P goes, because they're definitely early to the market. There's nothing on this chart that suggests that it's safe to sell short. So we'll continue to give the benefit of the doubt to the buyers in here once again. Now looking at the Nasdaq 100, the Qs, you can see that this market was up also. It was up 44 cents, or a little more than 1%. But if you look at the daily chart here, it's just really a mess. There's no real trend in here right now. We've got all these moving averages crossing back and forth. This market remains in the midpoint of this range that it had been in, if you take out that brief failed breakout in here. So there's really nothing changing there. There's no reason to get aggressive, long or short. It continues to be the prudent course of action to be cautious in here. Yesterday I had suggested that perhaps getting above 43.95, this little resistance in here, would lead to a rally up towards about 44.40. I still think that that is possible, that we'll see the market rally up towards 43.35 to 44.45, and it's not going to change anything on this daily chart, though. We've still got a sloppy back and forth action. So don't get excited by the headlines and a one-day good move. I think a lot of that had to do with short covering rally in here, so there's nothing really to get excited about in my opinion. We do have support now down near about 43.85, so that's going to be the important level to watch as far as support goes. If that gets broken, then we're going to get a lot more defensive. But right now the short-term trend is higher, and it looks like it ought to continue to move up a little bit from here. We'll see what happens. The mid-caps have been the one really leading strong group in the market here, the MDY, as this group continues to break out into all-time high territory. And we could take a look at this, and I suggested last week that perhaps this is a inverted head and shoulders pattern that would give us a target of about 146 to 151, 157. So I just took the height of this pattern, added it to the breakout point of 151, and that gives us an approximate target up near about 156, I think I just said. So this mid-cap group looks like it's definitely the strongest group out there, and that's where the action really continues to be. It's a little bit extended here right now, but it looks like it ought to continue higher by the same token. So take a look at the semiconductors, SMH. Semiconductors did have a good day today. They were up, well, they didn't really have that good of a day. They were only up 4 cents. I was looking at something else. But we're still stuck in the middle of this range here. This 34 level seems to be important for whatever reason, and that's about the location of that 50-day moving average as well. Looking at a shorter term time frame, it's a mess in here. There's no real reason to be trading the semiconductors unless you're in an individual stock where the trend is a little bit clearer, but definitely not seeing it on this semiconductor chart. Let's take a look at the stocks. That wasn't a very good wrap-up today, but my mind seems distracted. Let's take a look at Nasdaq.com, NDAQ. We got short this stock at 34 bucks a share, and we got stopped out today at $33.60 for a gain of 40 cents in there. ENZN, we also were stopped out of. We got involved in this stock on the long side at $8.80, and we were stopped out today with a 14-cent gain at $8.94. I don't know what's wrong with this chart. Well, I don't know what's going on with these charts, but this eBay we got stopped out of today. We were in yesterday at 32.15. Got stopped out with a loss of 29 cents today as it touched our stop at $31.86. Hoku, H-O-K-U, I had suggested buying this stock above $5.30. That never occurred, so there was no trade that took place in there. ITT, this one was a case of a stop that was set too tight because the stop was at 58.55. We were stopped out with a 35-cent loss, but the stock continued to rally after that. ANDE, there was no entry in there. We were looking for a rally to 38.75. You can see that our initial rally was 38.74, and then it did drop, but not. It didn't. In fact, once it got to 38.75, it didn't drop back down through our levels, so there was no entry in that one. Sonic Solutions, however, SNIC, this stock did break out past that $18.20 level that we were looking for. So I think now you've got to raise your stop in here. Let's put our stop at break even in Sonic.